Welcome to the Payroll Podcast, the show that explores the latest insights and innovations in the world of payroll. I'm Nick Day, founder of JGA Recruitment, a specialist global payroll search firm. I'm also a qualified executive coach and a recognized Reward 300 member. And my goal for this show is clear. It's to bring you expert guests and payroll leaders who are driving this industry forward. From cutting-edge technologies and trends to compliance, analytics, automation, leadership strategies, and more, we're going to cover it all on this show to help you to deliver accurate and timely payrolls across your organizations. So let's join together in raising the strategic profile of payroll worldwide. Grab your coffee or your favorite beverage, and let's get started. Hello, everybody, and welcome to today's September edition of Payroll Question Time. Now, for those of you that don't know me, my name is Nick Day. I'm the founder of JGA Recruitment. We're a specialist payroll recruitment agency. We are now officially international, not just in the UK, but in the US and Europe as well. I'm also the host of the Payroll Podcast. I'm a Reward 300 member, and I've been in this wonderful industry now for over 20 years. It's not as long as Simon, but it's longer than most. It's an industry I very much love and an industry that I'm very passionate about raising the profile for. And I love, of course, hosting this show, Payroll Question Time. But that's enough about me. Let's, Simon, if you can introduce yourself to the listeners, please, today.
Yeah, hi, everyone. It's great to be with you again this afternoon and back up after the summer break. I'm sure you all had a great time. Simon Parsons. So I originally joined Centerfile, as it was then, part of NatWest Bank, in 1984. So a few years back, in fact, it was 1984. So 39 years ago. I've worked in other suppliers as well, but I came back as chief analyst after the Ceridian takeover in January 1997, and we're now part of SD Worx family. It's great to be back. I'm part of Reward 300, as is Nick is. I've had the Lifetime Achievement Award, the Strathern, in 2012. I have a Master of Science, fellow of the Chartered Institute of Payroll Professionals. I'm really an IT guy, but with a passion for payroll.
Yeah, which is absolutely going to come through. If those of you who haven't met Simon before, you'll discover that during the course of today's show. Let's find out what we're going to be talking about today then. We're going to talk about parental leave rights, the HMRC self-assessment student loans, investment zones, what's the future of payroll, holiday pay updates, the SD Worx Academy courses, a number of those, and there's a discount code as well. So do look out for that, and I will make that available to you all because it runs out soon. We're going to talk a little bit about pensions and any other hot topics or Q&As that we haven't managed to cover during the course of the show. We will cover again at the end. But of course, just to reiterate that question piece, if you ask us in real time, we'll try our best to answer it in real time. We won't have to wait till the end of the show. So the sooner you put the question in, the sooner we can get to those answers for you. Right, well, let's jump into our first section for today then. Lots to get through, and that is, of course, handling our recent payroll updates. There's a couple here. I'm going to talk about a couple that Simon is as well. I'm going to let Simon kick this off. Millions to get more power over working hours. Simon, I wonder if you could bring that recent update to the fore.
Yeah, sure. I guess this relates partly to the Carter review that happened some years, not Carter. I've got the wrong guy now, but I've forgotten his name as well. But there was a review in government on employment rights, and the Matthew, I've got his first name. You can see I'm great at name retention. But what's happened is some recent private member bills have received royal assent, which will extend an element of some of the employment law review to provide additional rights. So millions to get more powers over working hours. So there's been a number of employees that for some time have had one-sided flexibility. So they've not really had control of their working time. They may, as ONS statistical information says, work 26 hours a week on average, but be on 0 hours or other types of arrangements where new law is coming in. So millions of workers under the Predictable Term and Conditions Bill, which has now received royal assent, will potentially have a legal right to request predictable working patterns, encouraging workers to begin conversations with their employees. So I think it's more of a be prepared. So those that think that you could have your employees come in and out whenever you like and have control, there is a little bit more power being placed into the workers' hands to say, I can't handle this unpredictability of work. I need something more predictable, and they may come in and request more of a standard pattern of work.
Super. I think of a couple of comments coming straight in. So we're just testing that everyone is indeed listening. And that is to say the name you're looking for, Simon, that escapes you is Matthew Taylor.
That's the one.
So I thought that might be helpful. Also, in addition to that, the national minimum wage is to be extended to live-in domestic workers. What's that all about?
Yes, another private member's bill. I'll find the name of it. But again, it's passed. We don't know officially when the actual information will come in, because there'll be a number of national minimum wage changes that we'll hear about for April 2024. Of course, we've got the autumn statement on the 22nd of November. So we'll hear the announcement on how national minimum wage, national living wages to rise. And also there's the original proposal that goes back some years that the age for national minimum wage would drop to 21. So whether we've got that on the agenda later, David, I can't remember. So we can always cover it again. But this is under the National Minimum Wage Amendment number 2, Regulation 2023, removes some of the conditions for family member working. So in effect, this probably relates to a couple of cases which may be close to considered slavery, where domestic workers living in a home treated as family members who weren't actually family members were exempt from national minimum wage. That exemption is being removed, so they will be due national minimum wage. But there were a couple of high-profile cases over the past few years, potentially prosecuted under slavery, where they had people in homes that where they were claiming exemption under those aspects of national minimum wage law. That's ending. It doesn't end for true family members that meet the certain conditions, but just to make you aware that some of the family exemption are going. So they're set out, if you want to know, under Regulation 57, where 57.1 defines the term work and doesn't include work undertaken by relations to employer's family household if the requirements set out in Regulation 57.2 and 57.3 are met. Those are the important things to go and review. Now, hopefully that doesn't affect most business, but if you're dealing with domestic arrangements, etc., and payment of domestic type workers, it may affect, whereas before they were exempt. They won't be come April.
Super, fantastic. Well, I'll give you a little bit of an update because it's a little bit of a plug here that I'm in a live environment. I'm going to take the opportunity to mention a bit of news that's occurred from the world of payroll recruitment, which is JGA Recruitment has launched in the US. And I say that because we are officially the first payroll recruitment agency to offer payroll-specific recruitment services in the whole of the United States. We've opened offices in Austin and in Tampa, and there are other agencies that do tech and HCM tech and HR and other bits and pieces, but no one specifically focused on payroll. So that's what we've done. You can find out more at JGA Recruitment Inc. And I mentioned it .com, but I mentioned it because many of you, of course, will have US counterparts, will be part of a larger US corporation potentially. So if you're familiar with JGA Recruitment in the UK and you need support recruiting payroll talent in the US, I'm delighted to say that we are the first agency to ever launch such specific services in the US. And of course, hopefully that'll be an opportunity for us to really continue the work that we do to try and raise the profile of payroll, not just here in the UK, but globally as well, which is equally as important. And we're partnering with Payroll Org as well, which is the biggest membership organization in the world, actually, for payroll professionals, with over 30,000 members to help with that launch process as well. So if you're not familiar, I do write a lot of articles for the Payroll Org magazine. The last one, which I'll put a link for, which is about DEI and its relationship to payroll. But again, all part of our process and I guess ambition to raise the profile of payroll globally. So I thought I'd make a little plug there for the new business. For those who haven't checked it out, do go over to jjrecruitmentinc.com and you can find out more, and I'll put that in the chat. Simon, back to you. I've got Stoptober. Tell us a little bit about that.
Okay. Yes. Well, I guess it's an element of are businesses planning anything for Stoptober? So Stoptober is the Stop Smoking and Good Things Happen campaign that happens annually. It probably went a bit quiet during the COVID periods, but again, there's an element of, well, just promote it because we're at the end. October arrives on Sunday. Are any of you and your businesses planning on it? You can say, what's that got to do with payroll? What's that got to do with HR? Because this is just a personal matter, isn't it? But I think there's an element of the government have pushed out some, as part of the campaign, some statistics to back up the fact that we'll actually improve health rapidly by giving up smoking. In fact, within a week, so they're saying 95% of ex-smokers see positive changes soon after quitting. So the research shows that within 2 weeks of giving up, 45% have more energy, 42% feel healthier, and 42% help breathing. How does that relate to employment? I mean, a lot of that may be people who are unfortunately in health conditions where they don't have employment, but lots of people in employment still smoke, and they would probably benefit from those statistical basis as well. So there's an element of, if that's promoted by employers, that improves attendance, reduces absence, reduces or increases the health of the employees so they can work longer, as it were, be healthier, enjoy life better. So I'm sort of being sold to the communications and the sales aspect of Stoptober, go for it. Your workforce will be better. Your productivity will be better. They will feel benefits of it within a few weeks in many cases.
Fabulous. Yeah, absolutely relevant, I think. And I think it also ties in with the idea that payroll professionals are more involved in looking at the data these days anyway, right? So absence data and things like that all impacts. Another bit of news as well, I'm sure many of you will be aware, but you never know, we do get people that come to this show that aren't familiar yet with the Chartered Institute of Payroll Professionals. If you are new to that organisation, they're holding their annual conference next week on the 4th and 5th of September. So both Simon and myself, I think, are on the same table at the awards, which will be fantastic, with Jason Davenport. So I hope that we'll be seeing as many of you at that conference as possible. And I guess it's a chance for me and Simon just to say, if you are there and you want to connect with us in person, please do let us know, drop us a message, let's grab a coffee, let's connect, and hopefully we can see you at the conference and we can have a really good time enjoying the awards as well. It's a really good event to connect. And now that everyone is back to face-to-face connections again, it's an event I'm particularly looking forward to this year. So over at Celtic Manor as always. So just to mention that for those of you who haven't booked your place or aren't familiar with the CIPP, it's worth having a look at what they do and what they offer and connecting that way within the payroll professional. I think it's cipp.org for those that aren't familiar with the URL. Next but not least, I've got the HMRC standard for agents has been updated. Now, the standard sets out HMRC's expectations of all individuals and businesses who are tax agents. Tax agents are agents and advisors based in the UK or other countries who are acting professionally in relation to the tax affairs of others. So more tax related potentially than payroll. However, I think it can potentially have an impact on you all. So sections of the guidance has been updated to outline the expectations from both MHRC and agents. That's worth checking out if that impacts you. And of course, something which Simon may be familiar with, which is the HMRC self-assessment helpline has reopened after a 3-month closure, giving taxpayers the opportunity to speak to an advisor finally. So I'm sure that's been a very, very busy helpline, I should think. But finally, they can help callers again get some help if they need some support. According to some who've attempted to access the helpline, though, waiting times of up to an hour were the norm as callers have been battling to reach advisors. Although the HMRC have said that the first phase of the process has helped its agents deal with over 250,000 additional repayments, and that reopening the helpline is simply the next phase of the trial. Any comments there for you, Simon?
Yeah, it's a little bit controversial. We've got to be careful, I have to say, because of course we're all friends with the HMRC, aren't we?
Absolutely.
And we don't want to upset them. But yes, the agent side has probably been a little bit critical because on the one hand they've opened one service, on the other hand they've closed another. So I think they're kind of rotating call centres around to different activity. So as the self-assessment opens, I think the agent's helpline has closed or been pulled back a bit. So in interesting times. It's a phenomenal task for them. at HMRC to handle the millions of calls they receive, and I'm sure we wish them all the best. There's comments that you see in the press. You don't know how applicable they are. It's sort of they're all at home, but generally I found them extremely helpful when you do get through. But I'd say on average call times for myself when I call them, it takes about 53 minutes to get the phone answered.
But interestingly, an HMRC spokesperson has said since they reopened that they've got their current average wait time down to 30 minutes. Whether that's true or not, let's wait and see. But that's what the spokesperson has said. So let's hope that's the case, because it can be frustrating waiting on those lines. But listen, let's jump into the key topics for today. The key topic, and if there is any, by the way, actually any recent news that we've missed, myself and Simon, please do put that in the chat box and the questions box. We can share that with everyone else that's listening. It's been over a month, so it could well be that we've missed something that you think, actually, we should have highlighted this and we haven't. So do let us know so everyone else who's watching today can also be made aware of any news we may have missed. Right, in the meantime, let's jump into parental leave rights. We're going to kick off here with changes in rights in relation to neonatal care. Back to you, Simon.
Yeah, sure. So the proposals again on neonatal care have been pushed forward. We don't have fixed dates, but it's an element of be prepared for neonatal to start. So there'll be statutory payments associated that we pay employees. These are for early births where babies had to be kept in hospital for various reasons, and the parents may need more support. At the moment, they're limited to paternity and maternity as rights, and this actually extends because, of course, the baby could be in a specialist unit for a number of weeks and the parents needing some elements of extra support. So this brings in an element of protection to them. So I think it's a watch out. This will be starting in the next couple of years. Quite a change for us payroll-wise, getting software ready and even the process and policies that you all have. But and you may even take a stance that actually you'd want to, because the rough boundaries of what neonatal care are known to a certain extent, what they'll cover. But do you as a business have a neonatal care policy in the same way you do for other statutory parental rights? I think that's all I'll probably say today. Richard, when he's back with us, I'm sure can share more of the detail of some of the specifics that come into play.
So how about paternity rights? And what are the things we need to look out for next year?
Yeah, sure. So from April 24, there are changes to paternity rights. Some of you may have already been doing this, not realizing that actually presently it's unlawful in relation to statutory paternity pay. But from April 2024, the previous conditions of paternity pay were that it has to be continuous. So you can have 1 week or 2 weeks continuous statutory paternity pay. You can't have 1 week, go back to work, have another week later. I know some employers have been applying that unofficially. That's not actually allowed in law. But from April 2024, it becomes the position that actually it's 2 weeks paternity pay rights and there can be a gap. And the extension of when that's taken is lengthened a little more. So I think it's look out for a little bit more detail when that goes through. But paternity rights from April 2024 are extended to allow split statutory payments and leave.
Fantastic. And nothing else we need to be considering coming up? That's everything covered now until we've got Richard back for the moment?
I think so. There are a few things that have been motoring around, and we have differences. If Lou was on the call today, we'd probably hear there are slight differences in Northern Ireland than there are from Great Britain, because Northern Ireland and Great Britain make up the United Kingdom, and some law is Great British law, as it were, and some law is Northern Ireland. They tend to align, but that's reliant on the various parliaments aligning it. Some of these things are not devolved in Great Britain, so they're not taken care of by the Scottish and Welsh assemblies, but the Northern Ireland sets its own law, usually in parallel. They usually line up, but there are elements of Northern Ireland actually extending beyond some of the Great British rights.
And as we've had a comment in the chat here that just says, I looked at neonatal care earlier this week due to the situation arising at work, and the latest date I saw was April 2025. That comes in from Jessica. It's kind of in line with what you were talking about. Super. Okay, so let's jump into the HMRC self-assessment then for student loans. We understand that thousands have been overcharged. This has been confirmed by the HMRC. Simon, what's the latest?
Yes, this is a general design flaw. This is one of the areas where I get amazed as a systems analyst type background on IT systems, especially in payroll, of thinking, what were they thinking of when they designed these things? And I'm sure some of you experience it now, but you may well be getting messages saying you've not applied a student loan, and you look at the record and think, oh, that's because they don't turn enough. But that's because they may have a salary sacrifice arrangement or a pension or something like that. And that's because the HMRC, when they check the FPS record, are looking at taxable gross values. But student loans isn't calculated on taxable gross values. It's calculated on earnings for Class 1 national insurance. So it's on a different basis. So there's an element of they're not looking at the same thing. And some elements that may be taxable are not subject to Class 1. So that's expanded into the self-assessment. So one of the other representatives, I sit on a group called the Employment Payroll Group, and also on the Share Scheme Group, and also the Student Loan. I'm on the Collection of Student Loan panel. I think one of the other representatives there is Ian Holloway, that some people may know. Matthew Brown challenged them to say they're seeing some issues with self-assessment, that the correct amount is calculated in pay in accordance with Class 1, and then in the self-assessment declaration it's asking for more. And so there was an element of HMRC were asked to look at that, and they've discovered that they've been looking at the taxable gross value for student loan assessment. Which means that people have been sent demands for further payments to meet student loan through self-assessment in error, because student loans are not assessed on taxable gross. They're assessed on Class 1 employment earnings. So therefore, they've been overcharged. So as of this last week, letters have been started to be sent to these cases to say, oh, by the way, you have been overcharged your student loan. Do you want a refund, or do you want us to keep the money and offset it against your liability? They have the choice to do both, because of course that reduces the interest charge, etc. For those, you think these days, Nick, will anybody ever pay off their student loan? But for those that would pay off their student loan, it would work out a little bit cheaper. And they're correcting the systems going forward. So big fault being found in self-assessment. It's using the wrong earnings basis, as does the FPS, for student loan calculations. Does that impact payroll? No, because you'll be doing it on the right calculations if you're using competent payroll software. For example, the Worx solution uses Class 1 earnings as required by the law.
Fantastic. Okay, well, that's a pretty good overview there. It's interesting. We're going to actually, I think it's probably time we get the audience involved in their first poll. Particularly, we talked a lot about HMRC communications today in relation to student loans, the helpline reopening, agents updating, and everything else. So how clear do we find the HMRC communications? We'd like to know, do we find them clear and concise, a mixed bag, or wordy and confusing? While waiting for those results to come in, if we can get everybody engaged in that, that'd be fantastic. We've had a question, oh, not a question, more of an observation pop into my chat box here that just says, from Rifat Anwari, I rang the HMRC and was on a call for an hour this week, and I rang yesterday as well, and they weren't even accepting calls. Well, of course, maybe not in not accepting those calls. That's what helps to get those average times down to just 30 minutes. I don't know. But thank you for putting the observation into the questions box. Now, I know that another 10 people have recently just joined the webinar mid-flow, so welcome. Just to remind you all, if you have any payroll questions, do put them in the questions box. We'll try and access those and ask Simon in real time as we go. I'm sure with 110 plus of you on the show watching today in real time, there must be some of you that have some payroll questions that need answering. So please do share them with us. If you want to keep it confidential, that's absolutely fine. Just make that clear in your question. We'll still read it out and get that answer confirmed as best we can for you. So if you have any questions, put them in the questions box. Right, let's have a look at some of these poll results, hoping we're getting some coming through here. I think we've had quite a few responses. How are we looking? So just for those in audio only, if you are listening to this back, we've got 3% say it's clear and concise in relation to how we find the HMRC communications. We've got 66% that say a mixed bag, and 31% say wordy and confusing. What are your thoughts on those results, Simon?
Yes, it'd be interesting to see the ones that are clear and concise, maybe. But I think mixed bag is where it goes. But some of it is wordy and confusing, and we might discuss one, which I have actually been involved in looking at the revision of the wording, which relates to the the August employer bulletin. They can be really confusing.
Yeah, it looks like that's in line with what people think as well from watching it by the looks of things. Okay, so let's jump into our next section then, because this is all about investment zones. There are, of course, 12 investment zones. Liverpool and South Yorkshire are test beds for levelling up the strategy. And there's some information that Simon's going to share with you all about employers' national zone relief as well. Of course, on 9th of August, the HMRC advised software developers of the new national insurance category letters to include in software from the 6th of April 2024, N, E, K, and D. And these new NI letters will apply to the new investment zones that have been set up and result in employer NIC relief similar to existing employer relief. Simon is going to tell us more. Simon, over to you.
Yes, investment zones are already in existence. So the investment zone national insurance relief for employers is already sort of in real life. However, they've piggybacked on the Freeport concessions. So the Freeport letters F, E, N, and R have been used to this point. So potentially investment zones could have new employments created from April 2022. So already over a year. And if you did, you could use FENR or FENR as the national insurance categories. That changes in April 24. When they actually have their own investment zone NIC categories, as Nick indicated, N, E, K, and D, or if you catch me on a bad day, I call them naked. So probably a little bit flippant, but the naked codes are coming. That will mean if you're operating Freeports already, you'll have to move from the FENR to the naked codes in April. They're calculate exactly the same way as Freeports. My own plea in the consultations was just keep the same NI categories, but they've decided to do their own. The reason being, of course, is that Freeports reliefs may close at a different time from the investment zone reliefs, but so far they have the same pattern. So national insurance employers relief up to £25,000 worth of earnings for 1 year from the start of, well, actually it's 3 years from the start of employment. Forget 1 year, that's veterans. Okay, and so looking forward to that. It'd be interesting to know, I've not come across any yet, but interesting to know if there's any employers that actually operate in Freeports and investment zones that are in our audience yet. You may have sub-departments that do, you just have an office that's now an investment zone, which, but with the investment zone, that spreads it a bit further, Nick, I'm thinking, because some of those areas are covering not a Freeport site per se, but a lump of remote area of Britain, as it were. So, and employers may just find themselves there.
Well, I've got a bit of additional information as well, which I've just researched in relation to this call before we started, where, as Simon started with, there are already national insurance holidays, of course, that exist for employers where on payday the employer is under 21 or under 25 and not an approved apprenticeship, or ex-armed forces, personnel veterans, and of course, employers or employees of employers in, as Simon mentioned, Freeport zones. The holiday relates to the amount of national insurance payable by the employer, not the employee. And we were talking pre this show today about different acronyms that we've been using, NECAD being one of the ones that Simon mentioned. Of course, HMRC has called this new initiative Investment Zone Employer NICs Relief, or IZENE, I believe, is just the acronym being used on that instance. There was another acronym I also found, which was called IZUST. Are you familiar with that one, Simon?
Eyes us, or you might have been. Yes, the upper secondary threshold. Yes,
Oh,
what a
this is
load of
good.
nonsense.
Very good.
Yes, yeah, and it's odd, isn't it? Because the way they specify this in law is it's different to the Freeport upper secondary threshold, which is different to the apprenticeships upper secondary threshold, which is different to the under 21s upper secondary threshold. So we now have 4 upper secondary thresholds, except 2 of them are the same value and 2 of them are a different same value. Why, oh why, oh why, I don't know. Well, I
Yeah,
do. It's
there's
because
some
they're
good
crazy.
knowledge. It's some very good knowledge. You knew where that was. To give some
Yeah.
context here, HMRC's March 2023 policy paper gave more information and how the November 22 refocus changed things, specifically the value of the ISIST. Originally, it was going to be 50,270 per annum, i.e. the value of other NI holiday regimes, such as that for under 21s, apprentices and veterans. However, the new threshold ISIST will now be 25,000 per annum, the same value as the Freeport upper secondary threshold, or the FUST. We are going acronym heavy here. If an investment zone tax site becomes operational before the 6th of April 2024, employers should claim the iZenir using the Freeport NIC category letters instead, and then remember to change them to the relevant investment zone ones in April 2024. Investment zones have been merged with Freeport zones, which Simon was mentioning, and renamed as special tax sites, i.e. the definition of sites where there are tax reliefs. The date on which tax reliefs for special tax sites end was originally the 5th of April 2026, but the end date has been reset to the 30th of September 2026, meaning that the eligible employee will have had to have started between the 5th of April 2023, so relevant now, and this date for the employer to claim NIC's relief, both Freeport and investment zones. Is that correct, Simon? Have I got that research correct?
Oh, it sounds good to me, Nick.
There you go. There you go. We've had a couple of questions come in as well. So I hope that covers. You have any questions on investment zones? Simon, as you can tell there from his knowledge of ISIST and other things, is very knowledgeable in the area. So do put them in the questions box. I've got 2 that are unrelated to this particular subject, but that's okay. The first is a quick check, as my mind has gone a little bit blank. Our business would like to issue a gift card to employees who won an award to the value of £245. Can I assume anything over £50, the whole amount, is taxable rather than the difference of the trivial benefit amount and the full amount of the gift card, and therefore still needs to be reported on a P11D?
Yes, or you potentially could place it possibly on a PSA or PAYE settlement arrangement if the employer wants to meet the liability. But in effect, a trivial benefit is up to £50. There could be multiples, just got to have a little bit of care. But if you've given £50 and a penny, it's no longer a trivial benefit. The taxable liability is £50 and a penny. So in your example, as it exceeds £50, the whole value is taxable. Subject to other exemptions that there may be around, Nick, and going back to our disclaimer, because of course, not all vouchers are taxable, because childcare isn't potentially in that same way or within certain limits. And there are other sort of exemptions. But as a general principle, shopping voucher would be taxable. It would also be subject to Class 1 national insurance.
Have you ever asked yourself, how can I recruit payroll staff effectively? Please don't give up on your recruitment project just yet. Here at JGA Payroll Recruitment, we appreciate the difficulties associated with attracting, recruiting and retaining top payroll talent. We also understand just how costly a poor payroll hire can be. JGA Recruitment are a niche payroll recruitment agency who will partner with you to resource payroll candidates who will improve both the accuracy and efficiency of your payroll department. Contact us today on 01727 800 377 or visit jgarecruitment.com to find out more.
I get the sense they probably knew your response anyway, but just want a little bit of a sense check, which is absolutely fine. So if you think you know the answer, still let us know. We can try and help confirm your suspicions are correct. The second question I've got has just come in a moment ago from Barbara, which says, I have a question about eye test, please. All of our colleagues qualify for an employer-paid eye test as they all use DSE. However, the HMRC guidance is confusing about whether reimbursement is taxable. We ask our colleagues to pay for the test themselves, then provide receipts from which we can reimburse. But I've seen different guidance as to whether this is tax or NICable or not. Any advice? Thank you.
Well, yes, this is where we say we can't necessarily give you tax advice because that's regulated activity, but we can give you some indication that this has certainly been a lot of discussion, and it's something that colleagues bring up regularly in the HMRC Employment Payroll Group, and it's why most companies operate voucher schemes. Is a voucher for eye test issued, which is usually through some of the voucher companies that at one time probably would have done lunch vouchers or similar vouchers, etc. It's very clean that it's not taxable. But where the employee is meeting the liability themselves and being refunded, it changes the nature. So I'm not saying one way or the other, Nick. I think it's an element of the employer needs to look and consult, because it's possible that you're actually making that payment from the employer to employee, which is cash earnings, so subject to tax and national insurance, and you don't want it to be. So because there are means to make the provision that it's actually tax-free, because employers have certain obligations to individuals, certainly those that work with, I'm going to use the old terminologies because I think it's still there in the law, although the proposals look at it, visual display units that you have to provide eye testing capabilities to. So it's the nature of how you're settling it that may cause it to be taxable and suggest you look at more details. And yes, is it confusing? Absolutely is.
Yeah, it is confusing. I hope that made that covers your question as best Simon can, Barbara. But yeah, thank you for raising it to our attention. Any other questions, please do put them in the questions box, and I'll try and ask them as soon as we get through. So let's jump to our next section then today, which is what's the future of payroll? So that's quite a big question to delve into. We have some context around this in relation to holiday pay in particular. But what new developments should we be aware of, Simon, and why have we added this under the world of future of payroll?
Yeah, and this is one really for the panel, wasn't it? It'd be great to have had Richard and Lou here, and even Sam, to talk about it. And Nick, you'll know that I'll have some personal biases on some of this activity, but I can give you some views of where I think the future was. And this is my dissertation in 2000 was written on the involvement of the internet in payroll. And at that time, the propensity for anybody to think that that was feasible was 9%. Okay, so 81% of payroll managers at that time would have said, no way is there any internet involvement in processing of payroll. Nowadays, if you look at the internet involvement in the process of payroll, the reality is it's probably 100%, or if it's not, you're still using paper and pen, or maybe. Because, and even we've certainly had situations with our own client base where they'd probably quiz us and say, well, of course, you're not doing any of this via the internet, are you? And it's sort of, well, you've been on it now for about 15 years. And yeah, absolutely. And we've never hidden it. And it's sort of, oh, you want a cloud-based solution that isn't on the internet. Do you know what these terms mean? No, I'm being a bit flippant there, but it can be a bit. Yeah, it can be. Well, I'll remind you. Some years ago, we had a breakdown of computer. I used to work for Sun Alliance, and they got an emergency box in to replace the equipment that had broken to keep the computer working. But it was orange, and when the senior management came down and saw this orange back box amongst the blue other boxes, they immediately asked it to be removed, not realizing what a fundamental part of the infrastructure it was, and was only a temporary loan. And sometimes I think we can come to those sorts of things is most things are delivered. What's the future of payroll? If I was talked about my dream, at the moment we hear a lot about pay on demand. I don't think pay on demand is changing fundamentally payroll, because it still fixes a cycle of activity. But my dream is to actually offer flexibility so that I could change my payday to when I want it to be. Similar as at one point, your mortgage would have all been taken out on the first of the month, and you didn't really have a choice. These days, you can have your mortgage taken out on any day of the month you want. Doesn't mean you pay it daily. It's just you've chosen when to have the deduction taken. And I think there's an element of, we may well move into a world where I can choose to be paid weekly, fortnightly. I can choose to be paid whenever I choose, and I can choose what the paid day is. And that's the sort of thing that I would hope that technology would support. Now, that may be seen as an element too strong or too far. HMRC are actually consulting about pay advances at the moment. National minimum wage team are looking at them because there are implications. But other elements on payroll, I think, certainly the access of information, how it transfers, how it integrates, how it deals with things is where I'd like to see the future. So you do something in one place, everywhere knows it's happened if you want it to. For example, change of name, change of address, change of details, it just goes everywhere for you. That's sort of the dream of where I think it is. Now, other panelists would have had other more broad views.
Yeah, I don't think I'm a million miles away from my own perspective. I guess I see the industry from a slightly different lens because I deal with payroll managers from different sectors and different verticals every single day, and I get feedback, but I'm not obviously processing myself. I'm placing people that do that work. I think one of the interesting things you mentioned, the internet example, I recall, I think it was probably 2018, 2019, that there was a survey run by the CIPP that talked about the adoption of on-demand pay. And I think 86% said it wouldn't be adopted in their business. And I think it'd be interesting to run that poll now. I think we'll see a significant change in those results. Whether that doesn't mean they've implemented it already, but I think the openness to adopting these ways of paying and these new evolutionary payroll processes now is much more broadly accepted that it's coming. And obviously all the software providers are working on different solutions under slightly different names to accompany that pay on demand kind of appetite, I guess, because it's there, and it's certainly very popular in other regions like the US, for example, as well. I think what was really interesting in your response, though, is everything you mentioned there was kind of systems related. I think the future of payroll now is very much around automating, as we know, the manual tasks, but the payroll leaders of tomorrow are going to need to be system leaders as well, and that's not just related to managing these different systems as they all plug in through different APIs and other things, and then ensuring that the data is accurate, because bad data in means bad data out, and we've got to manage those things correctly. But also because there's loads of different systems now that do different things. And I think that the role of payroll has broadened significantly. You know, we're now involved in wellness. We're now involved in the article I've just put in the chat, which is about how payroll can get involved in diversity, equity, and inclusion, and have an influence on those kind of things that I don't think ever would have been in the conversation a few years ago. And that sort of links to the collaboration that payroll now has with HR and broader stakeholders within a business as well. But of course, within systems, we now have access to a lot more data, and looking at how we can utilize that data more intelligently to drive strategic decisions, to improve performance, to improve engagement, attraction, retention, and all the different things. And you touched upon some of that data right at the start of this show, Simon, in relation to absence data, or looking at maternity trends or absence trends or sickness trends or whatever it might be. Access to that data can be really, really valuable because they can drive decisions at a higher level, and this is where you can really get payroll involved in the conversation, which is what a lot of payroll people want. That board level, I guess, involvement. But I also think I say this with a little bit of caution as well, because I think, and I may be correct, and I hope I'm incorrect, I really do, but I think with the appetite for and awareness that payroll now has this data at their fingertips, and the appetite for payroll professionals to really delve into that data and analyze it and utilize it, does make it slightly more open for those that are more less criminal, shall we say, to access that data, to hack that data, to try and target payroll professionals and payroll departments that may not have the security provisions in place to protect it correctly. Because I think data is now the most valuable commodity in the world if used correctly, and payroll has access to a lot of it. So I think with a word of caution, if you are evolving your systems very, very quickly, always keep one eye on how you're protecting that data, making sure that it's safeguarded, because years gone by before the internet, as you mentioned, Simon, everything was locked away in safes. And I remember going to a particular service provider's office on a client visit, and I wasn't allowed into the payroll office at all. There were two locked doors before you were allowed into the main office, because it was all so secure. Of course, then those days it was all paper files and locked away. So to get the data, you literally have to break into the building. Now we just have to break into a network. So things have changed. I absolutely think for the better. I think strategically it's amazing for payroll professionals. We're evolving very fast. I guess the last thing I would add to how I see the future of payroll, everyone's talking about the future. I think often we have great aspirations for what we want to achieve in 1 year, but we over-predict what's possible. And you mentioned pay on demand. It's coming, but it's not going to be here in every business in the next 12 months. But I do think we often under-predict what we can achieve in 5 years. And if you look back over the last 5 years to before the pandemic, and we see just how much the payroll industry has evolved and changed in that, what is still a relatively short period of time, it's been phenomenal. And we can talk about remote working, legislation changes, advances in software, data, and so on and so forth. So don't be too ambitious in year 1, but don't be surprised how far we come in 5. That would be how I'd view it. Anything you would add to that, Simon? Anything maybe you disagree with something I'm saying?
Yeah, exactly. Well, we'll have different views on different areas, but I think it's all being driven. But the main drivers are external influence there, aren't they? I mean, I've probably thought that home working was a great idea since I did it in 2001, but lots of people resisted it as being a bad idea, but it was forced upon us. And I think on the whole, it's worked out. And there's an element of maybe the inclusion of the internet in payroll was kind of forced by other stuff. We had the Carter Review. We had the introduction of RTI in 2013. Can you believe that? 10 years ago, over 10 years ago, that we were all forced into this new method. There's a question of where does that go in the future? I think it's one of the criticisms I kind of make in the representation groups is they keep on designing things based on a form that was used 40 years ago. It's kind of why? Start from scratch and think, what are you trying to achieve? So a dream, if I said HMRC wise, and maybe people will fall out with me over this, is get rid of the P45, get rid of the new starter checklists. You don't need them. There's an element of you change job or you start a new job, issue a share code to your new employer. The employer puts in that share code, APIs through to HMRC. You know their right to work status, you know their national insurance number, you know their tax code, you know their previous earnings if it's applicable, all just filters through because you've got a share code. Don't have to collect anything because the employee has notified via, I don't know, their personal tax account app. Oh, by the way, I'm starting a new job. These are the circumstances, tick, tick, tick. Share this code with your employer. Give it to the employer. The employer just collects it. So there's no openness to fraud, filling in forms incorrectly, answering the questions wrong. It's sort of reduced down. So I think government is part of that push for modernisation as well, because they're a key stakeholder in the payroll world. They're a third of the stakeholders, really, aren't they?
I think the other thing that I've seen from a recruitment standpoint is that it's other industries now, other business areas or entrepreneurs or whatever you want to put it, have recently identified payroll as being a real opportunity for profit. And to do that, of course, needs to develop new systems. I saw a report, I think it was about 2 years ago, by one of the software providers that said they valued the global payroll software market at 35 billion. Now, when people realize that actually maybe this is an area within business that hasn't been modernized as much as perhaps other functions have been, and we always talk about our counterparts in finance or HR, which always seem to get the budget first. So suppliers have kind of cottoned onto this and gone, you know what, it's ripe for transformation. And with that comes a lot of development, a lot of advancement, a lot of investment, a lot of R&D and other things that come out. And we've seen a lot of new suppliers come into the market space that I'd never heard of, almost from nowhere, and grow very, very quickly. Some not so much, because they haven't quite grasped what payroll or the complexity of payroll really involves. And I think that's I think it's testament to the fact that payroll now is very much in the public eye, and certainly within the world of business, they understand the importance of payroll. So I think that's been a massive, massive step. I think while there's money to be made, without being too down on it, but while there's money available, they're going to see more and more solutions come to the market when there's a sale to be had. So I think a bit like in my world of recruitment, I get pitched new software ideas and products every single day. And I think it's sometimes you want to buy every sweet in the sweet shop. We need to be a little bit selective about what actually is going to add value to our business, and utilizing and what the outcome we actually want, which you mentioned a minute ago, before we buy all the new shiny things. Now, I've also got here on the future of back to school holiday pay and prep for festive season. Have I got this out of date on my records? That doesn't seem to correlate on my notes. So I don't know where I've got that from. Is that anything that relates to you, Simon? Have I missed something here?
Yes, don't know. Back to school holiday pay. I'm trying to think what that's about.
I don't have that
Except
linked
is
to the
this
future
again
of
about
payroll.
Brazil? Yes, except there are consultations going on. So maybe that's what it's going about.
I see.
Because we had the Brazil case last year, which relates to appeal court from 2 years before. So a couple of consultations on talking about options for rolled up holiday, even percentage schemes. Now, some people will get excited and think, oh, we're going back to the 1207%. I think you need to understand what the proposal was. Although that figure might be there, it's about entitlements, not pay. So it's an element of that. So I think it's a watch this space because, and it has been in the press recently as well, because there was an article the other week about the frustrations of non-clarity on holiday pay law. In fairness to the government, they probably say, no, there is clarity on holiday pay law. It's as set out in the Working Time Regulations and the Employment Rights Act. The challenge is people don't want to comply with that, but they quite like the idea of some of the proposals. So it's an element of when are the government going to move forward with the proposals? Well, it's watch this space, we don't know. But at the moment, Working Time Regulations and Employment Rights Act. The other is an element of, I think the item was actually Christmas is upon us soon. So just a reminder about your limits, £250, holidays, gifts, turkeys, things are coming up. That maybe it's an element of thinking as a payroll manager, because if you're a payroll manager like lots of payroll managers I know in businesses, you don't hear about the fact that the company has decided to do all these things for Christmas or other reasons until after the event, when you're trying to figure out what you do about P11D, payroll, PSAs, and everything else. So it's sort of get in there, be involved in the strategic planning, because some employers just do things not realizing the tax implication. And equally, there are other things, if they knew about, they'd have taken advantage of the tax advantages, but they didn't know they could. So it's an element of Christmas season, festive season coming about. A couple of years ago, Nick, I think we're all in our Christmas jumpers talking about this stuff, but we thought we'd raise it in October because December's too late. So just to
There's
remind
a chance
you,
also for payroll people to get the communication strategy right now, right? Get your comms out, because there'll be those team managers that think it's okay to give bonuses and prizes and things away without any thought about the payroll consequences. So if you navigate that early and remind everyone in your business what they can or cannot do, it might just make your own payroll process that much easier come Christmas time. So yeah, absolutely well put. And it might feel early to everybody, but actually I don't think it's too early. I went into Tesco's and I've seen them already starting to put the festive stuff out. So if it's not too soon for Tesco's, it's not too soon for PQT. That's my view. Let's jump into the second poll. I would like to know today if there have been any dashboard difficulties. So we're back to the HMRC again, trying to get a flavour for or a feel for how things are going. How is the HMRC dashboard working out for you? It always balances, it never balances, or it's sometimes out. While we are asking all of you to put those results in, we've had a couple of comments in the questions box. I'm going to read those out as we go. The first is, I think it was in relation to why I saw that festive point on the slide, but Joanne's mentioned it requires people to do something when they start a new job, but so many people feel it is a payroll's job. Every month we get the question, why has my tax code changed? Can you put it right, please? I think it's a common thing that most payroll departments have to suffer, unfortunately, but it's a good point, well made. Carrie Ann has said, where are we with the car allowance and NIC case against the HMRC? Are you familiar with that case, Simon, and any updates that you can share?
Well, yes. Well, the case was won by the company, so potentially you can claim the national insurance reliefs on the 45Ps, etc., that weren't necessarily dealt with in that way, because HMRC indicated previously you can't. So there is an element of logging your claim and progressing. So it's not a subject we focus on today, Nick. There are a couple of articles around that we could probably highlight out at some point. or even cover in more detail on the next session. But yes, there is a provision, recent case where the employer won the right to claim back or offset to get national insurance reliefs on car payments, which previously they weren't given.
A couple of other questions come in. So far, we've got 49% of you have answered the poll. So we'll just wait a little bit longer to get everyone to vote so we get the most comprehensive results that we can. Keep voting if you haven't done so already, just so we can get that in there. We'll have some commentary on that in just a moment. Next question. I have a holiday calculation question. We have a lot of hospitality clients who use rota systems which calculate holiday. If some systems haven't brought in the correct new holiday average calculations and the client gets audited by the HMRC, where do they stand on the calculations? Thank you.
Okay, well, firstly, holiday pay is not an HMRC matter, so the HMRC won't get involved in it. Would the National Minimum Wage team get involved from HMRC? They might, but again, holiday pay doesn't count for national minimum wage purposes unless it's being used for judgment points. So this is an employment law related matter. So the means of correction by an employee is through the employment tribunal sort of system. So taking out an industrial tribunal case or the courts. So the ET has some time limit restrictions, but that they won't hear if out of time, but that doesn't necessarily stop an employee taking an employer to court going back up to 6 years. So it's not an HMRC matter generally, unless we're talking about national minimum wage judgments. But again, they're not there, to judge on holiday pay. Now, under the, I've forgotten his name already, Nick, and the guy's reminded me. It shows how nervous we get on this. Matthew. Yes, on the Matthew Taylor review, his proposal was for a single enforcer to be brought in, but the government have delayed the introduction of a single enforcer. So the single enforcer would have meant an audit team coming in, and if they found breaches, they could order the employer to take action. That's not going ahead at the moment, so it's left with being an individual case against individuals.
Fab. Okay, cool. So I've got another question that's come in here. Question in relation to reduced employers' NICs in investment zones. Do we know where the investment zones are?
And I think the answer is yes. There's a published maps and list of them, but they're growing all the time as more and more get added. So the government do produce little map charts which tell you where the investment zones are. So if you did a little search, or it's something I'm sure we could put on, SD Worx have an information site. The quick and easy way to get to it is just by typing in payhr.uk. The long address is sdworx-payhr.co.uk, but payhr.uk will get you there. We could look to actually publish some links. They're not there now, but now it's been suggested we could put some links there to help you find them easier. If not, Google.
Fab. And last but not least, and we'll get these poll results. Thank you everyone else who's just got their votes in. Rashid, let's get the votes on the screen. I'll read it out in just a moment while I ask this question, Dave, if that's okay. So last bit from Jack says, not sure if anyone else has experienced this, but the HMRC seems to have rejigged all of the payments received to the wrong tax months, which then takes them months to correct if they can do it correctly. Is anyone else, have you seen something you've seen, Simon, or if anyone else has experienced the same, please let me know in the chat or in the questions. Is that something you're familiar with, Simon?
Yes, fairly common. In fact, 31% of those that responded are probably finding that's on that list, and maybe even the 63. It's fairly common occurrence. You'd think that after 10 years of RTI, it would be starting to balance a bit better, but I guess their investment funds are on other matters.
Yeah, agreed. Right, let's have a look at these poll results. We've got nearly all of you have voted, so thank you ever so much for getting involved. For those in audio only, the question was dashboard difficulties. How is the HMRC dashboard working out for you? And the results were as follows. Always balances, 6%, well done to you. Never balances, 31%, and sometimes out, 63%. What are your thoughts on those results, Simon?
Yes, it's interesting. I think they're in alignment with what I would expect. but not in alignment with what I may be led to believe by the official sources. The official sources tend to say that only 2% of employers have challenges. However, 2% of 2.4 million employers that we have in the UK now is a large number, and that may mean that you've got more than one employee. So it's more likely to hit those sorts of groups. So if you've got lots of employees, the more you're likely to not balance. But quite often it's portrayed as not being a problem. And one of the reasons I think we asked this was we believe there is more of a problem out there. And there's many a time I've gone to contacts and it says, oh, we've never had this problem with any other employer. It's just this employer. And I say, well, that's interesting because this is exactly the same as the employer I told you about last week, that you've never seen this problem with any other employer. I don't mean that to sound cynical because to an extent, but there is a reality of, I think if you're experiencing problems, you're not alone.
Yeah, I would agree with that as well. Okay, well, let's jump back into the slides then, because we've got some interesting announcements here from SD Worx, because they have a number of courses. If you're not familiar with the SD Worx Academy, I suggest you take a look, because they're doing an awful lot of work to promote the world of payroll, to promote knowledge in payroll, to raise the profile of payroll. Some of the webinars I've been involved in myself, they bring some excellent panelists to different courses, including, of course, our very own Simon Parsons. So some of the courses to come, we've got the 2nd of October, hiring your first employee. The 4th of October, national minimum wage and introductions. Of course, both of those are next week. Still time to sign up for both of those. 13th, we have parental leave and pay rights. The 16th, navigating employee relations. So share that maybe with your HR teams as well. 18th of October, payroll part 1, followed by the payroll part 2 on the 19th. And then the 20th, we have payrolling benefits in kind. That's a really popular topic on the PQT. So if you do need some support understanding how to payroll your benefits in kind, that's a great one to sign up for. 27th of October, we have the gender pay gap reporting and ONS data. And the 31st of October, family-friendly policies. Just a reminder to everybody, there's a discount code here, which is ending soon, which is back to school 100. By all means, take a screenshot of this call if you like. If you want to book this straight away or wait for the slides to come through. But a couple of courses here you might be interested in signing up for, indeed getting your team to sign up for. And even if you can't make any of these dates, I highly recommend having a look at the SD Worx Academy for the latest in payroll-related resources. It's an excellent hub of information for anyone wanting to get a little bit ahead in their knowledge in relation to payroll. Right, I'll leave that on the screen just for a moment in case people are interested in finding out a little bit more. But while we leave that on the screen, let's jump into pensions, because there's a couple of pensions updates I think you wanted to let people know about, Simon. I don't think we need that slide. I think we'll leave the SD Worx Academy slide up for the moment, but maybe you can let people know about the pensions tax relief confusion that's been happening in the world of payroll, and hopefully we can straighten that out.
Yeah, sure. So this is reference to the August bulletin. In fact, if you read the August bulletin, it clarifies everything except it clarifies nothing. So so let's cover from that. Some of this we'd have loved to have had Andy Nichols with, and I'm sure he'll be in our next session from the pension regulator. He's got other commitments today, so he's unfortunately not able to be, but he'll be back with us and can cover. So you'll get it from a non-pensions industry sort of view. But the employer bulletin referred to the fact that there's over 10% of employers are getting their tax relief settings incorrect on the payroll application. And this is a language issue. And one of the things I've highlighted out to the HMRC, in fact, I was speaking with them yesterday because they've asked me to help them a little bit with rewording, is they are now calling the relief at source scheme not net pay, which is interesting because it says relief at source scheme. This is something along the lines of the employer bulletin that says the relief at source scheme is not net pay, and this is deducted after net pay. And you think, if that's confusing, I can't think of wording it any more confusing than they've worded it. And equally, the net pay schemes is before tax. And so this is causing great difficulty because HMRC have used common language terms for things that mean the opposite to what common language should tell us they mean, because they're talking from a tax point of view, not a payroll point of view. So net pay arrangement isn't because it's deducted from net pay, as some people seem to describe. It means the tax is deducted from the net pay. Yes, gross pay minus pensions, the net result you tax. So it's before tax. And relief at source seems to imply there's tax relief in the payroll application, where absolutely there isn't. There is no tax relief in the payroll at all. So relief at source means that they believe the amount has already been taxed, so it's after tax, but the pension scheme reclaims the relief back from HMRC direct. And say 10% of employers, all sizes, are getting them the wrong way round. It's evident in the RTI FPS submissions, and lots of those. That's quite a sizable group. If that's 10% of 2.4 million, that's 240,000 employers have got it wrong. There may be some significant tax bills to pay, and liabilities that are on the employer.
It is a little bit confusing.
Oh, it's totally confusing. Yeah, my personal plea to the HMRC, I've been making it for many a year, Nick, is that they change the names altogether and call them pre-tax or before tax and after tax.
It would certainly help.
Before tax pension scheme, it would, except they probably use it the other way around and they say, but but before tax, after tax. MPA is before tax, RAS is after tax. Okay,
super.
And we'll see where we go.
Let's get the pension slide up if we've got it there, Dave. I'm just going to ask now, we've got another thing I'm going to run through on pensions as well in relation to the auto-enrollment proposals, which Simon's going to run us through. Before we do, this is going to be the last opportunity for anyone to ask their payroll questions. We're going to jump from pensions into our final Q&A. So if you have any questions you haven't asked, it doesn't matter what that question is. There's no such thing as a bad question. Maybe it's just to confirm something you think you already know but just want some clarification. This is a chance to put it in the questions box. We can run through that before we close today's show. And while we've got you as well, Simon, before we jump into auto-enrollment, I want to mention something that's come in from Karen that just says, I've lost count of how many clients we have taken on that get RAS and net the wrong way around, as you mentioned. So as well as a tax bill, again, agent bill as well to fix it. And if there's 10% of people, there's a good chance that 9 or 10 people that are watching this right now might be in that camp. So do double check that you're getting this right to avoid those double costs that Karen very kindly has pointed out may be coming if you don't. Okay, so let's jump into the pension auto-enrollment proposals, Simon. What's that all about?
Yeah, so there's a private members bill. This is all part of government policy as well, but it hasn't gone through in government time. So it's gone through under a private members bill, and it now has received royal assent. So that means it's enforced now. Well, actually, it doesn't. It means that the concept of the bill is had royal assent, and that gives the government the go-ahead to pass the regulations that apply and set a date to implement it. So what are they? So they're probably not April 2024, although you could get surprised maybe in the autumn statement, but I don't think they are. But the age of pensions AE is going to drop. So that's dropping from the current down. So be aware that the age for a pensions AE will drop. And equally, the government proposal is that pensions contributions will start from £1. So there is no lower threshold or earnings. The earnings trigger may well remain, but there is no lower threshold. At the moment, it's been frozen for the past 2 years. Prediction, if you just ask me, what's the prediction for next year for pensions? The pensions lower qualifying earnings threshold will remain frozen. So will the age, but 2025, 26, 27, one of those years, we're going to start them drifting down. Whether that's a cut by 50%, cut by 0, we don't know, but the bill has been passed and received royal assent to enable the government to implement pensions AE being extended to many more people.
Excellent, fantastic. Well, that pretty much closes today's show. I want to remind everybody of the next PQT, which is going to be on the 26th of October. Registrations will be open soon at sdworx.co.uk/PQT. A reminder as well that we released a new payroll podcast episode today. And I specifically mentioned that because it was in association with SD Worx. It was a part of a 5-part Payroll Foundation series, We've recorded 4 of the 5 parts so far. You may well have joined us on those live webinars. If you haven't, there's still time to sign up for the 5th part of that series. The first part was called Creating the Foundations for Payroll Success. And it does talk about the 6 key drivers that can lead to payroll project success, in particular, if you're trying to get your sort of people management ecosystem right within your business. So that's available today. It was recorded. It's a recording of the webinar that took place. It was hosted by Worx with myself. There was Bob Rayhill was involved, as was Adam from Lace Partners. So it's a really good episode. And if you're interested in creating the foundations for payroll success, then please do head over to either our website, jjrecruitment.com, to access that, or it's available on all major podcast channels, including Apple Podcasts as well. And obviously that's in connection with Worx. And the rest of that series will also be published in due course. If you enjoy episode 1, look out for episode 2, 3, and 4, which will be dropping very, very soon. It just leaves me to say a huge thank you to everybody for joining us today on the Payroll Question Time. And I look forward to seeing you all again on the 26th of October. Thank you ever so much, Simon Parsons, our resident payroll expert, encyclopedic knowledge of everything payroll. It's been a good chat with just the 2 of us today, and hopefully there'll be a bigger panel next time. Everyone, stay safe, and we look forward to bringing you up the next episode real soon. That's all for this episode of the Payroll Podcast. I hope you enjoyed our discussion today and gained valuable insights and inspiration to advance your payroll career or your payroll operation. If you haven't already, please do subscribe to the show so you never miss a future episode. And if you found this podcast helpful, please take a moment to leave us a little review on your preferred podcast platform. It's your feedback that really helps me to improve the show and, of course, attract new listeners so we can continue to raise the profile of the payroll industry for all. Finally, if you know anyone who could benefit from this payroll podcast, please do share it with them. Let's spread the word and build a vibrant community of payroll professionals worldwide. Thank you, of course, for listening. My name is Nick Day. Please do look me up on LinkedIn and send me a connection request. In the meantime, I look forward to being with you again on the next episode of the Payroll Podcast real soon.